What's up everyone, my name is Anthony, and in this video I'm going to do a lot of important updates on the broader stock markets, including the S&P 500 as well as the Nasdaq. So this past Friday, the last trading day, we did drop massively in the indexes, so we dropped 0.8% in SPY and almost 0.8% as well in QQQ. So that of course brought our portfolios up pretty decently. This past week we've been up quite a bit. Same for the month. This is actually just a new account that I started as part of getting ready for bear markets in the future. And so far we already are up pretty decently on this account. And we've been trading the past complex correction, which I will talk about in just a bit. And we've always been bearish on this, trying to cash this downside. And so far we've gotten our account up nicely from getting on that downside. And just the fluctuations on this account have been pretty decent just because we've been trading a complex correction. And as I'll talk about in the future, that's very choppy and up and down motion. But we stuck to the play and we got rewarded and we took profits on everything on Friday. So for those of you in Discord as well, that was some really good money there from the downside in the markets. And now I'm going to talk about what we can expect to see in the future trading weeks or after that as well. So just to go for SPY. So in terms of SPY, we do have that wave 4 that hit right here. So we have that wave 4 of downside that happened this past week. And just to zoom out a bit so I can bring some background to that area. So we have, let's go to the 15-minute time frame. So on SPY, I want to focus on this extension of a wave 5 over here, and that wave 5 forms another 1, 2, 3, 4, 5 pattern. So we have in purple here that 1, 2, 3, 4, and then a 5 upwards. And this 5th wave is also extending into the golden yellow pattern. So a wave 1 up, 2 down, 3 up, 4 down, and now this wave 5 up here. And those are a lot of markings and details, but I just want to point out the counts that really matter and for trading especially. So within this golden yellow wave 5, I want to point out this other yellow count right here. So 1, 2, 3 up here, 4 down, and then a 5 up. And this wave 5 is also extending into the green count, which is what I've been trading recently, as well as what I've been signaling in the Discord as well. So let's go to the 3-minute time frame. And so this green count right here is what the main focus of recently has been. So we have that wave 1 up, wave 2 down, very extended wave 3, and then a wave 4 complex correction downwards. And now we should be heading upwards for a wave 5 to finish off this bull market run since the COVID drop. So this wave 4 took on something called a complex correction, which is a WXY pattern. And as you can see, if I take away all these charts and indicators, we do have that really choppy up and down motion. And that's what you can see here in Robinhood. That's what causes our portfolios to be pretty much a roller coaster of profits and losses. And we did take profits when it was at that upper range because we've been pretty much spot on for the price action in SPY and the triple Qs. So for this WXY pattern, let's just zoom in a little bit on it and get some knowledge from this price action. So we did have a W wave forming. So a W wave would take on a 3-wave structure, and that would be an ABC, just simple flat correction. And we have an X wave, a failed impulse to the upside, and then a Y, so another leg of correction. So that's just a WXY, or you could consider this an ABC as well, just some three-legged move to the downside. So that forms your Y wave. And this whole WXY forms your major W wave for the 4th wave. So this is your W. And this X wave is another failed impulse. So just a 3-legged move to the upside that fails to push higher. So the main indicator that this is an X wave is that you can see a lot of choppy price action. It's really hard to divide that impulsively. And that just means you won't really form some kind of like 1, 2, 3, 4, 5 structure to the upside. So when you trade these corrections a lot, you can pretty much tell from the price action whether it's an X wave or an impulsive wave. And I did signal in Discord that this does not look impulsive at all. And that's why we stuck to the puts and were rewarded very nicely after it topped out here. So this X wave, after we formed this, then we went downwards for the Y wave. And that once again formed your WXY structure. And this last Y wave right here formed a 3-legged move, so a WXY. So these corrections can be pretty complicated and can really trap people to go bullish and bearish because they do bounce back and forth heavily in either direction. But when we do recognize with wave theory that this is a complex correction, you no longer get trapped by either direction. You don't get trapped by this pattern because essentially this pattern is meant to make people lose money. It's a money losing pattern because it can deceive a lot of traders. And if you know what's going on, then you can stick to your trade. And in this case, we were swinging SPY puts throughout the entirety of this duration. And I never once sold anything throughout the correction. I just held it through, and we were rewarded with that final push to the downside. So that was on Friday as well. So that's pretty much what happened on SPY, a simple WXY, and we did hit some of the perfect retracement levels that we were targeting. So our main profit taking level was right here at a retracement level, so the 0.382 at around 447, and we did fall down to the next retracement level, but that's just, it's better to take profits and be secure when it does hit these levels. So we did get out here, and we actually did enter calls now on this bottom of the Y wave right here. Technically, the indexes still could go down to the 0.618 retracement level, but I do think that's rather unlikely, and even if it does, it will still come back up to retest current levels and even all-time highs for this wave 5. So right now I'm actually going to diagram out what the price projections for this wave 5 could be. So to do that, we'll just take simply the extension of this wave 1 right here, the length of this wave 1, and drag it down to the bottom of this wave 4. So if wave 4 does bottom right here at around 445, then these would be your expected Fibonacci resistances on the way up. So I'm going to actually put these in bold. All right, let's just do this one. So over here, we do have the 1.618 at 453, and notice how that is right at all-time highs. So I would first target somewhere around here. So the one-to-one extensions at 450 to 453, these would be your initial areas of resistance on that wave 5 upwards. Depending on what the structure, how the structure turns out, when it does start moving upwards, we can adjust these price targets. But just based off this wave 1 thing, this is where you would expect wave 5 to have most difficulty moving upwards. So if this wave 5 does extend, which is very likely, as you can see in the markets, we have extended these wave 5s over and over again. So we have come to this point in the markets before, and we just continue to extend that wave 5. So if we do see another wave 5 extension, then this wave 5 can really go higher up. It can go way past all-time highs and can continue stretching even into the 460s. But we'll be able to see that once we do start getting the price action forming. So I'll just keep an eye on that, and of course I'll keep everyone updated in Discord and in the YouTube with what happens. But for now, just while we're here at pretty much near the bottom of this wave 4, we can expect the wave 5 to form some kind of just maybe a 1, 2, 3, 4, 5 like this. And if we do stop here, that would form your double topping pattern on the indexes, and that will lead into your bear market formation right here. So we'll see what happens with that. I am looking for September 21st and 22nd as possible dates of expecting some resistance in the markets, because that is the date of the FOMC, the Fed meetings, which will, in that time, possible rate inflations and increasing rates and all that stuff might be announced. And that could be a trigger for the sell-off for this broader wave correction. And so I also want to talk about that a little bit in this video. So if we zoom out a lot, so let's go down to the 1 hour time frame. So if we're looking and talking about this correction that's going to be happening after the wave 5 has completed, so let's zoom out a little bit on the price action since this COVID drop. So here's the wave count. So we have a wave 1, 2, 3, 4, and then a 5 moving upwards. So after you finish a bunch of wave 5s, what happens? So that's a good question, but at this point, it can be there can be multiple possibilities. So we could either have a simple ABC correction to the downside, so just some sort of like, we take an ABC, we have like an ABC, which would be a zigzag structure, and that would probably take it down to some retracement level. So we just take the entire move to the upside, and let's say it stops right around, let's say 455. So that would be forming a double top pattern on the indexes. Then we would have these retracement levels to look out for. So 397, 363. So that's a lot of downside to be expected in the indexes, and different corrective structures will take on different patterns. So for example, if we do have a zigzag, that would help take it to probably the lower retracement levels. And if we did have some kind of complex correction like we did have for that wave 4, then it would be a little bit more complicated, because we would have some kind of choppy price action, such as like some up and down motion at the top here. So say we do have this and we do kind of form some choppiness and then we head downwards. That is another possibility. And of course, this area right here would be a little bit annoying to trade just because of how volatile it would be. But the good news is that when we do start to form a top, so let's go back down to the 3-minute time frame. So over here, when we do start to find some resistance and head downwards, then pretty much almost immediately after we see some of that downside move, we can start to identify the possibilities of what pattern it's taking, such as a zigzag, a triangle, a complex correction, stuff like that. And of course, I will keep you guys updated with what happens with that. But either way, regardless of what the structure is, you will get that initial leg of downside. In either pattern, you're going to get some sell-off. So that's why I'm trying to target with puts in the future once we do get to these resistance areas over here. So But right now, for now, we are targeting that bullish wave 5 impulse structure to the upside, and that's why I did enter calls at the end of the trading day on Friday. So far, we're looking for this last push of upside to the indexes, and then we'll be looking for some sort of sell-off. And that's what I'm mainly targeting right now. And the levels to look out for, so when we do start selling off, a major confirmation of this sell-off is right here. So this is going to be right around 441. So notice how this is when you fall under the wave 1 area. So the wave 1 topped right here at 441. So if we do start to fall, say we come up here, and then we say the wave 5 truncates, and we do fall under and keep falling, then once we fall under this zone, that is a confirmation that we have entered that broader market sell-off. So that's a signal entry for puts. If you really want to trade that type of way, if you want to wait for confirmation, that's your signal area for a bearish market. Or you could try to catch the top right here, and that's what I'm probably going to try to do. So we'll see what happens, and of course I'll keep everyone updated with the price action. So temporarily bullish on SPY and the triple Qs, and after we hit this resistance area, then we'll be heading downwards. So just to reemphasize that on the triple Qs, so we did get the exact same price action on SPY in terms of the wave structure. So interesting green, same thing. So 1, 2, 3, 4, 5, and this wave 4 formed a complex correction. So just like SPY, we had very similar structure. So a WXY downwards, and this W wave formed an ABC flat correction, so three-legged move, and then this X wave was a failed impulse right here. So as you can see, this structure right here does not look impulsive, and I did signal that once again to make sure that people stick to the trade and don't get kind of deceived by this price action. And after we topped out here for the X wave, then we moved downwards for a WXY pattern. So after this WXY, we should pop off for that wave 5 to the upside, and that could possibly retest all-time highs. And just to reemphasize, this Y wave down here also took on a WXY, and same with this Y wave took on a WXY. So you can see that subdivision within the complex correction, which can make it very difficult to trade. But as long as you know that it's doing a complex correction because of wave theory, then you can stick to your original price projections and get profit from the trade. So now we can test out some extension levels for this wave 5 right here. So we take the length of wave 1, drag it down to the bottom of wave 4 right here, and we get some extension levels as you can see. So once again, I would target the 1.618 to 1-to-1 extensions right here. So that's right around 381 to 385. And so that would retest all-time highs and even go above it. So those are just expected resistance areas once again for the wave 5 impulse upwards. And if we do start to see this wave 5 extend further, then we could go really high. We could go even to 390, but we'll be able to see whether it's extending pretty soon by next trading week, and I'll keep you guys updated as well here in QQQ. So just in terms of VIX now. So VIX, we did expect a pop in volatility because we're expecting that wave 4 to hit across the broader markets, and we did get exactly that. So things are looking really good in terms of VIX, and now we can expect a cooling off of this volatility. So we should see some sort of return back to some of these trend lines right here. So once we do return back to these trend lines, then we'll see the indexes also go up. So this downwards move in VIX would correlate with this wave 5 upwards in the broader stock markets right here. So wave 5's up here, VIX would go down to probably retest this trend line right here around 16 to 17. So that's going to be it for the broader stock markets. And now let's move on to some individual stock picks. For the first one I'm going to talk about is Apple. So we did get a pretty large sell-off. We got a 3.31% drop in the stock, which is pretty uncommon. And this did possibly lead to that drop in the indexes. But just in terms of wave theory, this was expected. We did get some sort of drop here. So in terms of looking at where Apple fell, we did reject right around those Fibonacci extension levels over here that are marked. And looks like we are starting the start of this Y wave to the downside. So just to zoom out a bit on Apple stock price action, we do have this completion of the bullish impulse sequence right here. And then we have an ABC correction forming that forms your W wave. And after this W wave, we come up for an X wave right here. So this is a failed impulse. So as you can see, there's no really clear impulsive subdivision of this X wave. And we do have, after we finish this X wave to the upside, you can continue subdividing the price action a little bit. We do get a mini, very minor degree impulsive wave to the upside right here. So 1, 2, 3, 4, 5. And we rejected that fifth wave right at the 0.786 extension at around 157. And then we headed downwards right after that. And it looks like this is the start of an A wave to the downside of this wave Y. So for that downside move, we would see an A, B, C formation, and that would possibly bring Apple stock back down to around the 122 levels to maybe the 116, just somewhere around here. It depends on how much we correct in the broader market indexes as well. So let's say we take these, we would expect that to be some sort of support area for Apple. I wouldn't start to trade puts yet because we are expecting some upside in the triple Qs as well. So that could very much lead to Apple having some temporary recoveries to this downside move right here. So for now, I would still look to not enter any bearish positions yet because QQQ is expected to have an impulsive wave 5 to the upside. So now I'm going to talk about Moderna. So Moderna is doing actually a pretty interesting structure. So we do have an ABC move to the downside, and this B wave is forming a WXY structure. So within this WXY structure, this would form, of course, your B wave and this Y wave right here. So it's a little bit complicated. So this Y wave forms another WXY structure. So just to zoom out a bit, if we start off here at the top, right around 500, we have that impulsive downside move. So 1, 2, 3, 4, 5 for Moderna. And after we bottomed out here, this would form an A wave. And this B wave right here would form your triangle structure. So A, B, C, D, E. And this forms this your typical attempt to recover some of the move to the downside. And then we push downwards again. So this is a failed impulsive wave to the downside. So that would form your X wave. And then after we bottomed out here for the X wave, then we pushed upwards for a Y wave. So this structure is very complicated. I guess it does make sense because after we did top out and have so much bullish momentum, it's going to be difficult for buyers to give up that upside push. And so I think that when we start to reject here, we're right around the 0.786 level. So this is another area of rejection, very common rejection for the Y wave. And I think we did hit some of those levels right here. So some of these X waves did tend to reject at the 0.786 levels, especially in the indexes. You could probably find those retracement levels. I think I removed them, but they're somewhere here. So as you can see, yeah, this X wave, if you can see, it did reject right at the 0.786 in SPY. And I think it also did the same in the Qs. So once again, we could see that rejection right here at the 0.786 for MRNA. And once we do, we should expect to head impulsively downwards for this C wave. And that just means you'll have a wave 1, 2, 3, 4, 5. And that would really help your stock correct a lot of that upside move here. And that would bring it down even possibly to 227 to 200. It could go down pretty far for the C wave to the downside. So just keeping an eye out on that. Of course, the first targets for downside will be right here, right around 350. And I did enter a put debit spread on Moderna, just trying to target this C wave of downside with main take profit level right around 350 to 360. So looking bearish on Moderna as well as Apple. Same thing for NVDA. NVIDIA is actually doing a pretty clear impulsive structure. So just to zoom out a bit, we do have a wave 1 up, wave 2 down, wave 3 up, complex correction for a wave 4. So that means you formed a WXY structure for a wave 4. And now we pushed up for a wave 5 impulsively. So that formed a wave 1 up, wave 2 down, wave 3 up, complex correction, wave 4. And then we pushed up for that wave 5. And once again, that wave 5 extended. So just to emphasize, wave 5s, as you can see, can keep extending. That's why I want to throw out a warning for the indexes. This wave 5 can extend just like NVIDIA's wave 5s are doing. So just want to throw out a heads up. That's why I wouldn't jump very heavily into like long-term bearish positions yet. We need that signal confirmation or just looking for that extensions of that wave 5 so we can better target and capture that top. So just going back to NVIDIA. So within this wave 5, we have a 1, 2, 3 complex correction for that wave 4 once again. And that just mimics your complex correction for the QQQ sector, which NVIDIA does have a high stake in. So it looks like we're bottoming out for that wave 4. So we should expect an upside push for the wave 5 of 5 of 5 of 5, etc. So this is your last bit of upside for NVIDIA. And in terms of getting that really precise target for that wave 5, we could see possibly somewhere around here. So these are your extension levels. So just once again, this blue rectangle marks areas of resistance just for that wave 5. I would probably move it up here. So 234 to 245 could be possibly areas of rejection for this 5th wave. And you could then enter some bearish positions targeting a potential ABC move to the downside after we have this final push to the upside. So NVIDIA very temporarily is looking bullish for the wave 5 of 5 of 5, and then we'll come downwards for a larger correction. So now we'll move on to AMC. So this is actually one of the only stocks that I'm pretty bullish about. and I'm heavily, or not heavily, but I'm in shares right now. So I've been riding shares up throughout this entire upside, which is really nice. Just zooming out a bit, so AMC is doing an impulsive structure, so we do have, let me actually zoom out a little bit more, so let's go to the hourly time frame. So over here, we have a wave 1 up, wave 2 down, wave 3 up, very extended, then we pushed for a wave 4 down, and then now we're working on a wave 5 to the upside. So within this wave 5, we have a further subdivision. So we have a wave 1 up, wave 2 down, wave 3 up, and wave 4 down right here. And now it looks like we're working on a wave 5 of 5. So if we zoom in on that wave 5 of 5, we have over here. So we did bounce right off our expected areas of support, just right at that top of the range. So for that wave 4, and it looks like so far we are in an impulsive structure. It's a little bit sketchy, to be completely honest, because this right here is kind of like a complex correction. So we have that wave 1, 2. This is a little bit uncommon for wave 2s, but so far it looks fine because we did push upwards for that wave 4. And now it could look like we could be pushing downwards for this wave 4 now, and then working on a wave 5 to the upside. So I actually haven't checked this yet. Let's look at the extension levels right here. And yeah, it does look like we're interacting with some of those wave 3 typical extensions. So far this looks impulsive and good to me. I'm only in shares. I'm not trading options because I think the stock is bullish over the medium term time frame. But in terms of predicting its like 5 minute, 10 minute, or just like very short day trades, I don't really want to enter any trades on that. So for now, I'm just targeting shares, and it looks like it's bullish. It looks like we'll be working on this wave 5 of 5, and we can further subdivide this impulsively, which is good. So AMC is still looking bullish, looks good. We're above 50, which is really nice. So yeah, it looks good to me. Just holding on to the shares. So next, we're going to talk about Bitcoin. So this is actually a very interesting kind of index because it is following wave theory very well. So we have a wave 1 up, wave 2 down, wave 3 up, and then a wave 4 down. And now we're working on this impulsive push to the upside for a wave 5. So if in this wave 3, just to summarize, we have another subdivision. So 1, 2, 3, 4, 5. And this wave 5 here formed your ending diagonal structure, which is this structure right here. So it kind of just a different variation of an impulsive wave. So 1, 2, 3, 4, 5. And then we rejected here, moved downwards for an ABC pattern. And now we're working impulsively upwards for this wave 5 of 5. So as you can see, a lot of indexes, markets, and stocks are just heading upwards for this wave 5 of 5. A lot of things are just very close to finishing upside. That's why I think there's going to be some kind of broader market sell-off. Just as you can see from individual stock picks, you can take anything, including Google, just like Apple, MRNA, like everything needs to kind of sell off in terms of technical analysis. So that makes sense because we are seeing the markets heading up towards that topping area as well. And stocks are confirming this bearish indicator. So just more emphasis on how I'm looking to enter more elongated puts on everything very soon. So now let's look at this final push to the upside for Bitcoin. So we have a wave 1 up, wave 2 down, wave 3 up. And then we got that, I think some news happened with just some news, and we had a very instant sell-off. And that looks like the start of your wave 4 right here. So it is an expected sell-off. We did actually initiate that right at the 1.236 extension level of this wave 1. So in terms of wave theory, this downside was completely expected. So it looks completely normal to me so far. So we're working on this wave 4 right now, and then we'll push upwards for that last bit of upside for the wave 5 and 5. And that could retest their all-time highs right here. So if we take some extension levels, let's say that we did actually bottom out right around here. So that, as you can see, some of these extension levels would take you right back up to all-time highs, and that could form your double top pattern. So if we take this, we could, so we could take your impulsive structure to the upside, form that double topping pattern, and then move for that correction downwards in Bitcoin. So that's what you might expect to see. There's just some resistances up here, and after we reject that, that could form your double topping pattern, and that would be a bearish indicator for Bitcoin. So, but temporarily, after we do find some consolidation and support for this wave 4, it does look bullish to me for that last bit of upside for a wave 5 of 5. And that's just what you can see across other stocks as well, not just this. If we do look, for example, even Google. So let's look at Google for a second. So in terms of this stock, we do have a very similar structure forming. So it actually did fall 2% today, and I actually haven't even touched this graph recently. So we did already get that start of this wave 4 sell-off right here, and it looks like we could actually kind of form that bottom somewhere around here, and then we push upwards for the last bit of upside for this wave 5 of 5. So I didn't even know that Google really fell 2% today. That's actually pretty interesting. I didn't really check on the stock too much, but yeah, it did fall 2% today, so that would really play into your wave 4 right here, and we did get a perfect rejection of some of these Fibonacci extension levels. So once we do bottom out for the wave 4, we would push upwards for that wave 5 of 5, just like the triple Qs and just like other stocks. So we are nearing that last bit of upside. This is pretty much getting to the end of the upside for these major cap stocks. And then we expect that larger soft to some support levels. So things are very confirming each other. Markets are confirming stocks, and stocks are confirming the broader markets. Even cryptocurrencies are kind of following that as well. So, so far, I think that everything's looking and shaping up pretty well. And so that's going to be it for this video. Just an update on everything as thoroughly as I can so far with price action. And of course, I'll keep you guys updated in the Discord as well as here in the YouTube with what happens over the next trading week or so. So thank you so much for watching, and I'll see you in the next video.